In the next 5 minutes, I want to share with you the debacle that's happening in the beautiful city of Austin, Texas. The houses prices in Austin, Texas are plummeting faster than Amber Heard's reputation. Hope you got the joke. But on a serious note, this is a sign of something bigger that's about to happen. So I want to take a deeper dive to discuss the following. Unemployment rate, migrants rate, house prices, median prices, demand versus supply, rents. So please stick around because in the end, I want to show you some startling facts and investors' opinion on what you should do if you are living, renting, buying, moving in or out of Austin, Texas. So let's click like and subscribe and let's go. The total population of Austin, Texas is 996,262 people as of today. But what's impressive is that there's 146 people migrating into Austin, Texas every single day. So let's look at the economy first. It appears that the layoffs have increased compared to past 2 years, which is quite shocking because, Austin is called the Silicon Hills of Texas. So what is happening? Subsequently, if you look at the unemployment rate, that's also getting higher, especially compared to the national average, which makes sense. More layoffs means more unemployment. As of July, the unemployment rate in Austin, Texas increased to 4.2 to 4.5%, and that is scary. So we'll give the economy a low indicator, meaning that the economy is pretty weak right now. But let's dig deeper into the growth sectors. Aside from hospitality, government, and manufacturing, everything is moving backwards. Ooh, that's not good. Now let's look at the median prices and the days on the market, because those are two things that tell us what? Where are the prices headed? The median price last year around the same time was $680,000. Now this year around the same time, the median prices are, guess what? $598,000, which is approximately 12% lower than last year. Now is that a crash or a correction? I think it's a correction, and here's why. If you have this Nike shoe that you purchased last year, that's worth $700 because it was high in demand. Well, a few years later, the same Nike shoe is selling for $500 because the demand is low and the supply is high. So this is a matter of demand and supply. Let's also see the days in the market. Hays County, around 53 days. Williamson County, 54 days in the market. Travis County, 41 days. But overall, the days to close is 80 days. That is pretty high. So now that we know that the prices are lower and the days in the market is longer, what is driving all of this? Well, it's simple. It's the mortgage rates, folks. If you look at the mortgage rates graphs from last few years, around 2022, end of 2022, the rates were increasing and the prices started decreasing. So obviously it's imperative that the prices are going to come down when the rates go up higher because they are directly proportional to each other. So clearly in this city, there's a bit of oversupply in the market. And that tells us two things. The sellers are confident that they can sell their house at a higher price because they're spoiled from last year. So they're willing to wait longer. But here's what's interesting. The buyers are also getting smarter and they're not overbidding. For example, look at the offers accepted versus rejected chart that I'm showing you. Seller confidence is high because they're rejecting more offers. They're willing to wait a bit longer to get a better offer. It also tells us that more buyers are putting in lower offers because they're getting smarter. Guess why? Because they're watching my video from 2022 and that's right up here. So now let's look at the rents because the rents tell a story as well. The rents are overall down in the city as the vacancy rate gets higher. Average daily rate in Dawson County, for example, is 14% below. Manor, Texas is about 4% below. West Oak is almost 39% below. That means it would be a great time for renters to just rent and chill because the rents are lower. Lastly, let's also look at the migrants population. As I mentioned, over 146 people are moving into Austin, Texas every single day. And that means they will grow the economy and buy more houses. Let's look at the charts here. San Francisco, 1,500 migrants per month. Los Angeles, around 727 migrants per month. New York City, 300 people are running away from cold and high prices in New York. So here's my expert investor opinion. If you must buy now, you must keep your offers reasonable, not compared to the current market, but to the market a few years ago, because remember, the market was high to begin with. Secondly, this is not a bad time to buy a property, folks, because the rates may seem comparatively higher to last year, but if you compare to a few years ago, there was a time I've seen rates as high as 12%. So 6% or 6.5% is not a historically high interest rate. It is all subjective. If you are renting, continue to rent as long as you like, as long as you can, to save up some money because rents are lower. Like, you can also call your landlord and ask them to negotiate the lease if you have an older lease at a higher price. Now, you could also wait for the rates to go down, but remember, the rates go down, what happens? I just taught you guys, the prices will go up, okay? So be ready for that. If I was moving into Austin today, I would rent, definitely. I would save us some money until the market stabilizes and then put a reasonable offer on a house that I like and look at multiple houses, because remember, there's plenty of inventory, so you can leverage that to your advantage. I hope you found this information useful. I think I have done it in 5 minutes. Please support my small channel. Please like and subscribe. Please check out another video that may be useful for you. I provide solid graphical data to you in this video just so you can be an informed consumer. Drop me a comment if you have any questions. I love you all, and we'll see you in my next video.